This is what your Wednesday edition of Business Morning is going to look like over the next 1 hour. Hello, everyone, and welcome to the program. I am Bosin Damofai. Let's get started with what is making the headlines. And we'll try to trim this down a little bit for you to get a sense of part of the conversations we're having on the program today. The World Bank latest Nigeria economic update shows that Nigeria's National Petroleum Corporation, or the state-owned oil company by the acronym NNPC, made deductions from crude oil sales revenue for petrol subsidies. According to the World Bank, that figure topped 139.3 billion naira in the first quarter of 2018, talking about January to March. So first quarter alone, about 140 billion naira was the total deductions by the NNPC from crude oil sales to support oil price of petrol prices at the official level of 145 naira per litre. According to the World Bank latest report released on Monday, that figure for deductions exceeds the NNPC's total deductions of 107.3 billion for the entire 2017 fiscal year. The World Bank report says that the landing and transportation costs for imported products are the chief cause for the rising under-recoveries by the NNPC, while the pump price is capped at 145 naira per litre. Of course, you saw the report on Monday this week from FDC, Financial Derivatives Company, that petrol prices at the pump stations crept a little bit higher to 147 naira per litre in the month of October, as you saw crude oil prices heading north. Now, let's break it down a little bit according to the World Bank report and follow the money. According to the World Bank, the NNPC's volume of petrol imports in 2018 was higher than any other year on record. In fact, NNPC is the chief petrol product importer for the government and for Nigeria as we speak. The first quarter 2018 imports by the NNPC of petrol was higher than the entire figure of imports for the whole year of 2016. According to the World Bank report, NNPC's deductions from oil sales or crude oil sales results in first quarter 2018 net oil revenues falling to 34% below the budget target set by the Buhari's administration for the period. Meantime, the net accrual of excess crude or into the excess crude account was negative in the first quarter of this year, despite oil prices higher than the budget oil price benchmark of $51 per barrel. And showing more of the details of what is going on, the World Bank says the total of $496 million was withdrawn from the excess crude account, or ECA, in the first quarter of this year by the administration to buy fighter aircraft for the insurgency operations in the Northeast. Meantime, $80 million was what accrued to the excess crude account in May this year, and no other accruals had gone into that account aside investment income. The excess crude account opened the year 2018 at $2.2 billion, with $1.9 billion balance at the end of June. That's the state of Nigeria's oil sector, and of course a bit of a snapshot of that from the World Bank in its latest Nigeria biannual economic report. Let's take this conversation a little bit down to the marketplace. Already in the news, this Sky Aviation Handling Company, a PLC, or Sacco, is going through an initial public offering. So what's the latest? One of the investment and securities trading firm, Codros Capital, says it has initiated coverage of Sacco PLC, currently offering 30% of its shares via an initial public offering price of 4.65 naira per share. That share offering is being done by the Bureau of Public Enterprises on behalf of the Nigerian government. As you already know, the BPE says those shares will be traded and, of course, will be distributed equitably among the federating units of the government. So, where are we at the moment? Codros says that the Sacco PLC was placed at 5.97 naira target price. That's the initiation coverage from Codros Capital, 5.97 kobo. The share price, the stock currently on IPO was being offered at 4.65 kobo per share. That's about a 28.4% upside on the offer price, or what we call the IPO price. And Codros Capital went on to say that he used what we call the pure DCF valuation methodology, looking at the assets and other parameters of this aviation handling company. Codros Capital, however, says there's what you call positive investment case for Sacco, and that centers on the company's long-term play on air traffic and aviation industry growth and benefits from higher barriers to entry. Making an investment case further for Sacco PLC, Codros says the company has become what you call, quote-unquote, a poster child for privatization on incredible turnaround that occurred in Sacco during the performance. The company was handed over to the private sector, what you call the CFAX Group. According to Codros Capital, Nigerian market is transitioning, and 2018 and beyond appears to be promising for Sacco to take advantage of within the aviation industry. Codros therefore sees economic growth benefiting from higher government and private sector spending and improved FX liquidity on higher oil earnings. So we'll talk more about the Sacco tomorrow. We'll give more time to folks at Codros Capital to talk to us more about that initiation coverage. Of course, the IPO will be over. They will expect those shares to be listed on the Nigerian Stock Exchange according to the plan rolled out by the Bureau of Public Enterprises. Meantime, let's wrap this up for you and look at what else is making the news. Continental Reinsurance, sticking with the marketplace. That's the share offering. The stocks listed on Nigerian Stock Exchange surged nearly 10% yesterday, 9.83%, driven by Continental Ray Africa Investment Limited planning to buy all outstanding and issued shares of Continental Reinsurance PLC at 2 naira 4 kobo per share. What's the deal? Continental Ray Africa Investment Limited is offering 2 naira 4 kobo per share for 10.372 billion ordinary shares of 50 kobo each, or ordinary shares of $1 in the capital of Continental Ray Investment Limited for every 176 ordinary shares of 50 kobo each held in Continental Reinsurance Nigeria PLC. If you're in the market street, I'm sure you're already aware of the Continental Reinsurance deal, and that is pushing that company's share price up. It went up about 3.3% on Friday and gained nearly 10% on Tuesday this week. And we're checking through with some of the market traders on this particular market news for you. But let's move on to check through with the market yesterday. Of course, there's a brutal Tuesday, 1.14% decline on the Nigerian Stock Exchange Composite share index for the second day of the week. So we fell again below those psychological readings on the broad index, 31,173.71. We started about a little bit below the 32,000 level, but now we've just gone seriously below that. In terms of equity cap, the market sunk below 11.7, then we lost 11.6, now we're at 11.529 trillion naira. In terms of activities, this was a little bit better than Monday's figures, but again, still below our daily market average. 182.2 million ordinary shares, a bit of aggressive bargain hunting. If you look at the Naira value, 2.75 billion naira. And also in terms of deals, Monday will give us about 2,900 transactions. Yesterday we crossed 3,000. That shows investors aggressive bargain hunting. But again, most of this went into what you call profit taking for the period. Part of the analysis conversation we're having after the break with one of the folks, investment folks from Afrinvest, about how the market is behaving just ahead of what you call the January effect, which everyone is talking about will most likely happen in December. So let's roll that away and show you the 5 key sectors of the market where money moves, volume moves, trade also move on a daily basis. The banking sector was badly beaten, 1.65%, much broader than the average market index average of 1.14%. GT Bank, which is a bellwether in the banking sector, lost about 2.51%. That's a very lot of beating for this tier one lender. Then you come through to insurance, which are just a bit of a cousins to the banks, found a very different reading, 1.17%. Again, we just talked about Continental Reinsurance, Continental Re Africa Investment, paying 2 naira 4 kobo for all the outstanding shares, 10.372 billion shares that are outstanding in Continental Reinsurance PLC. Continental Re Africa Investment want to pick up those shares at 2 naira 4 kobo. It's going to be an exchange of 1 shares for 176 ordinary shares of Continental Reinsurance PLC. That deal is currently on the street. The announcement came out a few days ago, and the market has been informed. That deal is driving Continental Re and is impacting the rest of the insurance sector, and that gives you nearly 1.2% on the index for insurance reading. But if you go back up to consumer goods, you find a negative nearly 0.1% on consumer goods. Industrial goods was where the cement giant Dangote lost some of his shares on Tuesday, down 1.03%, the most capitalized company on our market. And then you find the oil and gas, that's a brutal 5.68% because investors sank Seplat. So take it away. Let's check through. Seplat was crowned on Sunday night as the pearl of the Nigerian stock market at award ceremony. But investors did not take that into reading as well. They just ignored that pearl awards for Seplat, the making Seplat award in getting the best company on the market for the year 2018. Investors came in brutally, bruising that stock nearly 10% on very 211,574 shares at 500 to 590. That's quite a very a nasty way for Seplat, which is the only E&E on our market. Forty Oil, which is another bellwether, lost nearly 10%, just slightly more than what Seplat lost for about a million shares, 493. Forty Oil finished in 1730 on the counter. Oando gained 2.06%, but that wasn't strong enough for the rest of that space, and the rest were just largely unchanged. But if you see the oil and gas down 5.68%, that was due to Seplat and Forty Oil. Double One PLC also lost 3.03%, another bellwether in that space. Give us a minute, let's check in with the NESE over-the-counter market. That was a very brutal day and brutish for the stock market, for the NSE. But for the NESE over-the-counter, it was a rally, a very big rally on Tuesday. In fact, the main indicators of these small markets on listed securities actually touched a new high for 2018. The USI finished 735.78. That's a massive 3.20% to the north. And the market cap for the NESE over-the-counter find a new reading, break a new high, 511.38 billion naira. That's the year high so far since 2018 started. That's a big figure. But if you look at the volume, the primary indicators, you find that that's quite decent a day. 81,000 on listed securities traded for 10.92 million. But in terms of transactions, investors were just positive, trading the shares or the unlisted securities on NESE over-the-counter market called OTC. Today we have let's move on to FMDQ. Just to wrap up the market review for you. Today, we're expecting the central bank to sell about 130 billion naira in 3 dated treasury bills. We'll talk about that a bit later. But where are we as far as the second trading day was concerned? Quite a very decent, and you find why investors are locking in into yields that are very high on treasury bills and on naira bond. So investors over the last sessions have been locking in yield on treasury bills maturing later part of 2019. That's well after the elections, after the swearing-in ceremonies and all of that. So look at how investors locked in nearly 20 billion into treasury bills maturing 21st of November next year. That's about 365-day paper at 14.5%. The ones mature in February, which is falling around the election period, That's at 12.8, and the one maturing just a bit earlier than that, 12.85%. We'll get a lot more chat on that later on the program for you. But first, let's check in with the market lounging lazily around the political period. And then, of course, we'll talk about the Eurobond a little bit. After the break, 2 minutes.